So just like the title of this video says, I'm gonna talk about the 5 best Fidelity index funds that you can invest in. This includes the highest performing index funds in the market to funds that have absolutely no fees. Let's get started. Starting at number 5, we have the Fidelity Total International Index Fund. This fund tracks the performance of the All Country World Index, which is an index that seeks to provide investment results that correspond to the total return of foreign developed and emerging stock markets. It combines large, mid, and small cap stocks in developed and emerging markets. Basically, the fund invests only in international companies outside of the US. This fund contains roughly 5,088 international stocks, with the top holdings in companies like Taiwan Semiconductor, Nestle, Samsung, and Shell. When it comes to cost, this fund has an expense ratio of 0.06%. This means you'd only be paying $6 in fees for every $10,000 that you have invested. The average annual return since this fund was started in 2016 has been 5.65%. This means if you had invested $10,000 at the start of this fund, you'd have over $14,000 today. While these returns are about average, they are lower compared to the other index funds we'll be talking about later. But the purpose of this international fund is not for the best returns in the market, but to provide you with some exposure to the international market outside of the US, to different countries, regions, and currencies. With that being said, there are a few things you want to keep in mind. Since this Fidelity fund is invested in developing and emerging markets, that also invites more risk when it comes to economic, social, and political factors. This is not something the US is immune to, but some emerging markets tend to have less stability, which in turn creates more opportunity for volatility. This doesn't make investing in international markets a bad idea, it's just something to be aware of. It is a good idea to include international markets to your long-term portfolio to allow for that additional diversification. At number 4 is the Fidelity Zero Total Market Index Fund, FZROX. This fund seeks to track the performance of a broad range of US stocks, which includes large, mid, and small cap stocks. This index fund contains 2,709 stocks, with its top holdings in Apple, Microsoft, Amazon, and Google. The fact that it includes all ranges of companies makes this fund well diversified. The fund is fairly new and it was created in 2018. Since then, it's had an average annual return of 9.56%. If you had invested $10,000 when this was created in 2018, then today that'd be worth over $15,000. One of the main reasons why this index fund made it on this list is that it offers something else the other funds on this list don't have. So when it comes to cost, the expense ratio on this fund is 0. You heard me right. So this 0% means you'll pay 0 or nothing in fees on a $10,000 investment. I'm sure you may be thinking, 0 fees and great diversification, that's too good to be true. What's the catch? Well, when it comes to this fund and all of Fidelity's zero index fund offerings, the trade-off is you can't transfer these funds over to a different brokerage. So in the case you wanted to move these shares over to another brokerage like Vanguard or Schwab, you need to sell off your FZROX shares and find another fund similar to it, since these fund offerings are only available to Fidelity accounts. Another problem with this is if you sell that fund in a taxable account, then you will be taxed on your capital gains. In other words, you're going to be paying taxes on any profits that you've made from selling the fund. And just to throw this in here, the benefit of investing in a tax advantage account like a 401k or Roth IRA would allow you to avoid this tax hit. Next up at number 3 is the Fidelity Total Market Index Fund, FSKAX. This fund tracks the Dow Jones US Total Stock Market Index, which is an index that reflects the performance of a broad range of US stocks. This index fund has 3,955 holdings, with the top holdings consisting of companies like Apple, Microsoft, Amazon, and Nvidia. This fund is essentially the same as FZROX, which we reviewed right before this, but there's one big difference between the two. Remember, FZROX cannot be transferred to another brokerage. That's the trade-off of the Fidelity Zero funds like FZROX, is you get 0 fees, but you must keep it in a Fidelity account. FXKAX, on the other hand, is not a type of Fidelity Zero fund, and in the case you ever want to switch brokers, you can just transfer the FXKAX funds from your Fidelity portfolio to another portfolio of another broker of your choice. Now for cost, this index fund has a low expense ratio of 0.015%. So you'd be paying just $1.50 each year in fees on $10,000 invested. FXKAX has been around since 1997, and over the last 10 years, this fund has had an average return of 11.58%, which means with $10,000 invested 10 years ago, your investment today would be worth over $30,000. Now, you probably heard me mention the words small, mid, and large cap stocks when going over some of the index funds so far. If you don't know what that means, I'll give you a quick breakdown. When you hear small cap, mid cap, and large cap, this is just referring to the market cap or market capitalization, which is just a way to define the size of a company. Market cap is calculated by the total number of outstanding shares multiplied by the company's current stock price. For example, if a company had 20 million shares and the current stock price is $200, the market cap of that company would be $4 billion. And market cap is divided into three categories, with small cap being companies with a value of 300 million to 2 billion, mid cap is from 2 billion to 10 billion, and large cap is 10 billion or more, with the biggest companies being companies you're familiar with, like Apple, Google, Microsoft, and Amazon. Next on the list is the Fidelity Nasdaq Composite Index Fund. This fund seeks to provide investment returns closely to that of the Nasdaq Composite Index. If you're unaware already, the Nasdaq Composite is one of the most popular indexes, just like the S&P 500. The Nasdaq is weighted based on market value, so that means the companies with the largest total market value play the biggest part in influencing the price movements of the Nasdaq. This fund is made up of around 3,310 stocks, and its top stock holdings are in companies like Apple, Microsoft, Amazon, Google, and Meta. Now, you can see right away that the sum of these top 10 holdings makes up a large portion of the fund. Like I had mentioned before, the bigger companies contribute more to the value and the changes of this index. For that reason, it's understandable to feel that this fund may lack the proper diversification, since those funds hold so much weight in the index. It's worth noting that the Nasdaq has outperformed the S&P 500 for over the last 20 years. So if you still wanted to reap some of the benefits of this fund, it could be bought together with some other funds mentioned in this video to better diversify your portfolio. In terms of cost, compared to other funds in this video, this fund has a slightly higher expense ratio at 0.3%. So you'd be paying $30 per year for every $10,000 invested. When it comes to performance, this index fund has an average annual 10-year return of 14.96%. So if you had invested $10,000 10 years ago, your investment would now be over $40,000. At the top of this list is the Fidelity 500 Index Fund. This fund follows the S&P 500 Index, which tracks the performance of the largest 500 US publicly traded companies. This fund currently holds 506 stocks, in which the top holdings are Microsoft, Nvidia, Google, and Berkshire Hathaway. The expense ratio of this index fund is 0.015%, which means you're only paying $1.50 a year in fees on a $10,000 investment. As for returns over the last 10 years, this fund has had an average return of 12.19%. So with $10,000 invested 10 years ago, this investment would be worth over $31,000. When it comes to the companies that make up the S&P 500, these companies play a big role in the performance of the overall US stock market. Just to give you a better understanding, there are over 4,000 publicly traded US stocks, and the largest 503 companies that make up the S&P 500 account for 80% of the total US market cap. That means that the over 3,500 stocks remaining only make up 20% of the US market cap. For this reason, you can see how these companies really have an effect on how the overall stock market moves. Now, the only small drawback to this fund is because it holds the largest 500 companies, they're all large cap stocks. So this means you won't get any exposure to mid or small cap stocks through this index fund. And if you wanted to fill in the gap, you could combine this with another fund like FXAIX, but whatever you decide, these are all great index funds. And ultimately, it's most important to have an understanding of what you're buying. If you made it this far and enjoyed the video, please tap that like button and subscribe to see more videos like this. Thank you for watching, and I'll see you in the next one.